standpoint, a lot of people think that condos are a poor investment. Are you dealing with more, people that are looking to live in the condos or investors as well?
I would like to take a 10-minute break and then 3, 2, 1. How do you have the ability to analyze stock?
Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck, and today we're going across the border. We're bringing on a guest from Toronto, Canada, and he's super awesome, like high energy. You guys are going to love this show. Talking about condos and comparing, the differences between Canadian real estate and United States real estate, interest rates, all that type of stuff. So we try to bring you a little of everything on this show. Before we bring on Nico, I try to just really bring you value at any time I can, and that includes trying to be a connector for you. So if there's something that we can do to help you, please don't hesitate to reach out and ask. You can find me at derekdombeck.com or thegenerationsofwealth.com. And with that said, let's bring on Nico. And here he is, all the way from sunny, tropical Toronto. Mr. Nico James-Bach, thank you so much for being on the Generations of Wealth show, sir.
Thanks for the invitation. It's a pleasure to be here.
Well,
and it's not sunny. It's rainy.
We were jamming a little bit about before we started recording, and I told Nico, we send all the crappy weather from Wisconsin across Michigan, and he ends up with it. So you're welcome. Nico, why don't you just tell the audience a little bit about yourself, and then let's really dive into the world of condos.
Okay. Yes. Nico James-Bach is my name. I got into real estate primarily to help my mom, who's also a realtor. She was more in the IC&I sector, so industrial, commercial, and investment, specializing as a female in real estate, specializing in freestanding industrial buildings. So the sale and purchase of freestanding industrial buildings for her clients. So my role was basically to help with the administrative part of it. So all of the paperwork, make sure that all of the I's are dotted, the T's are crossed, and just to take measurements and collect data from these industrial buildings. She was a consummate talker, the extrovert, I guess, and she had no problems whatsoever guiding her clients into these very complex purchases. However, the paperwork and the administrative portion of it was her weak spot. So I jumped both feet first and helped her and accompanied her. When I lost my mom, I had to take over that role as being not only the administrative sort of head of our team, our two-person team, but also the extrovert. So I had to pull out all of the information that I knew, in my head and, from the years of study, get the point across to those clients. Then I obviously had to help those clients into residential purchases, for themselves and for their kids and family members. So I transitioned seamlessly into residential sales. And subsequent to that, because Toronto is a massive condo city, number 2 in Canada, Vancouver being number 1, Calgary being number 3, I thought it necessary to build a database so that I would only have one source in order to get the information and provide that information very, very quickly to my clients who were asking me, bombarding me with questions about new developments, things like, who is the builder, when is it going to be completed, and even properties that I'm actually showing them when we were in a condo unit, if there's a new development across the street, they want to know if it's going to block their view. They want to know everything about the condominium that I was showing. At the time, I mostly had to say, "I'll get back to you. I'll get back to you," and I just got tired of doing that. So I built a database. I called it CondoWiz. It's my own startup, and as I mentioned, it started off just dealing with condominium communities, but it's now since expanded into all multi-unit communities. So hotels. I decided to include hotels simply because a lot of the newer condominium developments have a hotel component, either as a separate building, a separate tower, or hotel units within the condominium tower itself. So it was like a hybrid. So I've included hotels, freestanding hotels, as well as those hybrid communities, long-term care facilities like retirement homes. There's an aging population and they need a place to go. So instead of going from a single family home into a condominium, for example, they would most likely go from a single family home into long-term care facility like a retirement home. So I decided to include those as well. I've also included purpose-built rental buildings that, the newest generation of purpose-built rental buildings look exactly like you can't tell them apart. So I needed a way to be able to tell them apart and to communicate to the consumers and even to other realtors, the distinction between a purpose-built rental building and a condominium. So with CondoWiz, the categories are very, very clear. So you can do a search of these communities just by their category type. I've also included leaseholds, and I've also included not only the condominiums, the standard condominiums, but also common elements condominiums. And I'm not sure if you have these in Wisconsin or in the greater U.S., but a common elements condominium community is one that looks like a freehold community. So it could have detached single-family homes, or it could have 2 or 3 story townhomes, and they're all freehold. Like the properties themselves are freehold, and the owners are responsible for the maintenance and upkeep of those communities. However, those communities sit on a common elements condominium corporation area. So the corporation takes care of the general maintenance of the roadways and garbage collection, and that's basically it. But they're an important asset class, and they're extremely hard to find if you don't know their specific address. With CondoWiz, one of the ways of finding communities is just by the street name, or by its asset class, or by its physical location if it happens to be a corner property. So there are very, very many ways of honing in on the specific community that you want. And I use this database also to help clients that are transitioning from single family homes to condominiums, and vice versa. So I'm not only dealing with multi-unit communities. I'm also obviously dealing with single family communities, and even people that are leaving home. So students, university students. So that's another asset class that I decided to include, are the university student residences, which are so hard to find if you don't even know the actual residence name or the location of the residence within a campus. So I can even help those consumers who will be transitioning from the home to a university or college student residence to a condominium, either through ownership or rental as a transitional period.
Well, that's a lot.
I know.
Yeah, we have very similar setups all around the United States. In fact, I'm in the process of working on developing out a freehold condo structure on acreage. And where it's just what you said, the homeowners will maintain their own structures, their own buildings. The common elements will be maintained by the association, and I would say and I love the comparison right between Canada and the United States. You're in a part of Canada where this is so common, right? It's a huge population. What's the population of Toronto and the surrounding communities?
About approximately 3 million.
3 million.
Yeah,
And people either have to go up with their buildings because there's just not
correct.
ground to build out.
Correct.
They have to go up.
Yes. I'm dealing with both, but there's also another component to that. Toronto has introduced what is called the multiplex. So they've expanded the zoning in key areas to allow for a single family home, either a bungalow or a two-story, as long as the lot size is conducive to accept a multiplex. They've allowed the zoning to permit the homeowner to convert that single family home into a duplex, a triplex, or even a sixplex in some cases, depending on the size of the lot. We also have laneway homes. A laneway home can be a two-story multi-unit property. So there are several options that Toronto, in particular Toronto, has added to sort of meet that missing gap between single-family home and high-rise condominium building. So now consumers don't have to choose necessarily between one or the other because there is that middle option.
And is pricing being affected? I mean, I don't follow the Canadian market that closely, but is pricing being affected with still a surge in up, costs of a condo compared to like building costs, right? Like,
all right. Yes, there are certain dynamics that are happening now. 2025 and 2026, we have a record number of condominium completions. So those condominium projects that were started just during the pandemic, to 2020, 2021, for example, they're completing now. And there were a record number of projects started during that period. So what we're experiencing now is a high number of, like a high inventory level of condominiums, together with what was for a long time, almost 3 years of high interest rates, just after the initial part of the pandemic, which scared off a lot of the investors. So that, and because they were scared off, they offloaded a lot of the units that they purchased in the pre-construction phase. So that combined sort of perfect storm results now in a huge number of condominium units that are just sitting. Either owner units, and they just can't sell them, or pre-construction units that are now completing and are remaining. Some of them are being occupied by tenants, but a vast majority are just, the builders can't even sell them. Now, this situation that we're in now is affecting the costs of condominium units in general. So condominium units are experiencing a softening and a depreciation, if you will, of their value. I stress that this is temporary. It's one of those cycles that exist in real estate, and we are going to run into a very different problem 2 to 3 years from now, when we won't have the completions, because now in 2024, 2025, and 2026, nothing is being built. Like, nothing is being approved, right? They're being maybe approved, but they're being stalled. So construction is not starting. So what that means is, in 3 years, when projects that should have started in, this year, last year, are not going to be completed, people who will require, housing of that type, because let's face it, the first-time buyer most likely will go into a condominium as opposed to a freehold property. When the freehold property starting price is $1.1 million, roughly, they can get into a condominium at 550,000. So there won't be any of that inventory available to them in 2028, 2029. So we'll be dealing with a completely different housing crisis. So in answer to your question, yes, it's affecting pricing now, but it is temporary.
you mentioned interest rates. What were the rates a year ago, and what are they now?
So a year ago, the overnight lending rate was 5% from the Bank of Canada, and that translated into uh, roughly 6.5% to 7% interest rates for getting a mortgage.
Mm-hmm.
Now, the overnight lending, and just before that peak of 5%, so like let's say 2019, the overnight lending rate was basically 0.25%. So
Right.
people were getting, mortgages for almost nothing, like 1.25%, 2%, for example. When it peaked at 5%, and the mortgage rates were hovering around 6.5 to 7, that was affecting a lot of people, like a lot of people. So that lasted about 3 years until the Bank of Canada decided to lower the overnight lending rate. That lowering of the rate started early last year, say June. So they went the opposite direction and rapidly cut rates by a quarter, sometimes even a half, at each of their announcements.
Mm-hmm.
Now the overnight lending rate is back down to 2.25%. There's another announcement from the Bank of Canada on March the 18th, and we'll see if it's going to be a hold or if it's going to be one final rate reduction. So that 2.25 overnight lending rate translates into a sort of like a 3-year fixed rate of roughly 3.5, 3.6%. Okay. Mm-hmm. And that is almost in line with the variable rate, which is, historically has been always lower than the fixed rate. But now the two rates are almost the same. In some cases, the variable rate is actually higher than the fixed rate. The fixed rate is based on, the 5-year bond yield rate and different factors, whereas the variable rate is directly affected by the Bank of Canada's overnight lending rate. So it's those rates that people are sort of, eyeing when they, trying to encourage them to also look at fixed rates, because they are now trending lower than the variable rate.
Did you say that fixed rate was only for 3 years?
That's the recommendation, because they're all obviously 5-year fixed rates, but they are slightly higher than the 3-year rate.
So that's
the recommendation is to lock into a 3-year fixed rate.
Yeah, and to compare that to the United States, it's most common to get a 30-year fixed rate.
Yeah, we don't have that here.
But what that challenge is with the 30-year is the average homeowner is still only living in their property for 6 or 7 years, and then there's
right.
So variable rates are attractive to people that are more prone to moving or more transient.
Move more frequently. Yeah.
But I can see where if you had a 3-year fixed rate and you locked it in today in Canada, that's great. But as you mentioned, 3 years from now, inventory is going to be down.
It's going to be down, and rates will be much higher.
So yeah, I can see how people were affected so much.
Yes.
When they were at 6.5 or 7.
Exactly. Yes.
And today, while we're recording this, we're at about around 6% for a 30-year fixed rate in the United States.
Yeah.
And the trend is looking like it might tick down a little bit, but I don't see us getting less than probably 5.5%.
Right. Yeah.
And, so condos in most of our communities here that are condo communities, they're not necessarily the big high rises, at least where I live. They're going to be smaller, maybe.
How many stories roughly? Was the general
2 to 4 stories.
I see.
Common. But so let's just say you had a 5-acre facility or complex. There may be half a dozen buildings on that complex with 4 to 12 units.
Okay.
And usually the builders are going to build, 1 or 2 buildings at a time and fill them as they go, instead of like, what's the average high rise have for number of units where you are?
The average height of a high-rise condominium here is, we'll say 30 to 50 stories, okay? Because this is such a vast city, like Toronto has a really a large sort of footprint.
Mm-hmm.
So most of the condominiums are concentrated in the downtown core. closer to the lake. So I'm going to say that the average height of a condominium is between 30 and 50 stories, and the number of units within those buildings ranges from let's say 300 units to maybe 650 units, 700.
So now I can understand why it takes 3 years to build one.
Oh yeah,
Yeah.
3 to 5 years actually
Yeah.
from start to completion.
Yeah.
It's only the boutique condos that are like, 16 stories or 12 stories and lower that take 3 years. The average number of years it takes to build a condo for the time that they break ground to the time of completion is 5 years. From the time that the project is announced, it's actually a 7 to 10 year arc.
Wow. So what does it look like with a condo owner that wants to live in it as, their primary residence?
Yeah.
And they want to move? Do most of these condo structures allow leasing of the units, or is it very case by case?
It depends. Like, you are allowed to lease out your unit if you're an owner, and if you want to have it as an investment, and then you want to buy another unit, that is up to you. You're completely free to do that. The condominium corporation frowns upon, buildings with a very, very high, owner to tenant ratio, but they have. There are no, I guess there are no real firm rules, against it. It's just that they frown upon it. But it's very highly regulated, especially since Toronto doesn't allow like an Airbnb type setup with short-term rentals. We only allow, with very, very few exceptions, we only allow 1 year lease terms as a minimum, and they can exist in any building.
So there's no Airbnb permitted. So with most of ours, and I shouldn't generalize because they are absolutely all different, but
Okay.
but most of ours are very similar. They don't typically want to have a higher lease ratio to owner ratio,
Mm-hmm.
but each individual condo association, which is very much the same as your corporation, typically they have your original bylaws, but those can get changed
Yes.
as owners come in and there's new voting and
Yes.
decide to change it.
Yes.
Which from an investment standpoint, I think that's what scares a lot of investors away, because I could buy a condo today that permits me to lease it out as an investment. And 5 years from now, there could be a vote, and I have one vote as the owner in a complex of 100 units. I get outvoted, and now I no longer can lease that out.
No, that doesn't exist here. The ability to lease your condo out as an owner of a condo unit, the ability to lease it out doesn't rest with the condo board. It rests with the city of Toronto. So the city of Toronto the various municipalities have rules and regulations with regards to long-term leases. So when I say that there are no Airbnbs, yes, it's true. There may be one or two or three. Actually, there are only 3 exceptions in the city of Toronto, as I know it. But the rest, the vast majority, like the rest of them, are minimum one-term leases, and the condo board has nothing to do with it. It's only the city of Toronto. That's a city of Toronto bylaw, not a condominium bylaw.
So if I wanted to buy a condo in Toronto and lease it out buy it with the intention of leasing it,
Yeah.
I'm going to pay $500,000 for a condo.
Yeah.
What would that lease for on a monthly basis?
It depends. The average lease of a one-bedroom unit, one-bedroom, one-bathroom unit, 600 square foot condominium in Toronto is roughly $2,700 so the average cost, now that the costs are now that the condo prices have come down significantly, for the reasons that I mentioned, and just for people who have to sell, so they will also take a hit on the value of their home. You can get a decent condo, which was unheard of. Like even 2 years ago, you can get a decent, large, like 1,000 square foot condo for $650,000, which was unheard of anywhere else, any other time, with the exception of like 10 years ago. So
Mhm.
you can lease that 1,000 square foot unit out for about $3,000 a month, make good money, and there's nothing to stop you as long as that lease is a minimum of 1 year.
Okay. Okay. To put that in perspective for the listeners, I live in the Midwest, so anybody listening on East Coast, West Coast, or in the South, you're gonna be really pissed off when I say this, but I live on a 40-acre piece of land with a couple of my own houses on it, and
Yeah.
the total of the two houses in the 40 acres is probably a million, 1.1, right?
Okay.
And to even think about living in a condo of even 1,000 square feet for 625,000 and thinking that's a good deal, I just kind of cringed a little bit. But it's all perspective and it's all relative
Yes,
to your area,
exactly.
right?
Yeah, exactly. You have to think about all of the amenities that are around the building, like transit, and it may be a place of near where you work, for example, where family is, plus the other amenities that are around, like schools, etc. But transit is a big thing in Toronto, and the trend is to build these multi-unit communities around the large transit hubs. And we're fortunate to have many of them in and around the Toronto GTHA, basically, because I also include Hamilton in this. We're fortunate enough to have regional transit, and the builders are targeting those areas so that they can build around them, because let's face it, the infrastructure needed to support, a 600 or 700 unit building is not a small thing. So, these cities grow as a result of that. And they offer a lot of utility, like a lot. Like you're not sitting in the middle of nowhere. Like you are in a well-oiled community. And you may work there, you live there, you entertain there, and that's where your life is.
What do you see the future of CondoWiz looking like?
I'm very ambitious. So right now the database includes all of not just Toronto, it includes all of Southern Ontario, all of the major centers that have a large multi-unit community base. So from Ottawa to Windsor to Simcoe County, which includes Barrie and Orillia, etc. It's all covered in the database. In addition to that, I've decided to keep the other two major cities in the same database. So I've started to add Calgary/Edmonton, as well as Vancouver, because let me tell you, the process of getting an app to the App Store is not easy. It's not easy. So rather than having three separate apps for the three separate communities, I decided to put it all into one. So I haven't made like a huge announcement, announcing those, the other two cities, but they are present in the database and they're growing because I'm constantly adding those multi-unit communities to those cities. But they are present and users are able to see them and do searches on them right now. So the future, as you alluded to, is to flesh out those other cities while maintaining, obviously, the updated information in the Toronto GTHA Plus, as well as adding two other very important Canadian cities, and that is Montreal. So Montreal, which is predominantly French-speaking, French and English, and also I want to include Halifax. So I'll have basically from coast to coast coverage within CondoWiz. In addition to that, and that's going to roll out, I think the last half of 2026 and the first half of 2027. In addition to that, I want to go into the US. So I want to have CondoWiz in the US, and I want to target four of the, I would call them, the biggest sort of condo specifics. I'm not going to really get into hotels at this point, but, condo specific cities, that being New York, Chicago, I would think Miami, and then perhaps San Francisco. So those are what I have in mind. San Francisco simply because it's a tech hub. So I want to sort of start there and see how CondoWiz can grow and adapt to a U.S. market from San Francisco, from the San Francisco standpoint. That's where all the tech brains are, and then add the other 3 cities as a start.
Well, I always love comparing notes between Canada and the U.S.
Yes,
we're basically identical in so many different ways.
I know,
but yet we have little nuances like we talked about with interest rates and banking and different things and so I have one final question for you, Nico.
Okay.
What should I have asked you that I did not? And it can be about
Oh, okay. So I guess what are my other passions and endeavors? I guess. Yes, I do have 2 others. One is Italian culture and language. So I also teach Italian, and it doesn't appear that Italian is anywhere in my background, but it is. It figures prominently. So I learned Italian kind of naturally, and that's from friends, exposure to friends who were speaking to me in that language. And then I studied it formally at a very, very young age, continued the studies into university, and eventually getting my master's degree in Italian language without even ever having visited the country. So I visited the country 2 years after I lost my mom. So in 2009, I made my first trip, and that was a mind it just opened up my mind to so many possibilities because I had never been to Europe before. My stepfather, that's where the name Bach comes from, was German. So I had never visited Germany, even though I spoke German, to my stepfather, who I considered my dad. But anyway, I got my degree after I got my degree, I went to Italia in 2009, and I've been going back every year since 2009. From 2016, I went twice. I started going twice a year, so in the spring and in the fall. In 2019, I went 3 times. I skipped 2020 because of the pandemic, and I returned in 2021 with great difficulty because they had a different way of processing vaccination, whatever you call it, passports and stuff like that. But anyway, I managed. And I went again in 2022, a little bit easier that time. I skipped 2023. I went in 2023. I skipped 2024 as I was developing the iOS version of CondoWiz. And I skipped 2025 as I was developing the Android version and getting really, really busy with client work. So I'm returning again to my beloved second home in probably April, May 2026. And the goal actually is to get my real estate license in that country. I'm now with Keller Williams. So Keller Williams is a global name in real estate. Before, when I was with Royal LePage, which is strictly Canadian, I was toying with the idea of actually having to join a second brokerage in order to be able to work or get my license in Europe, basically. I didn't want to do that, so I just put it aside. Now that I'm with Keller Williams, which I joined just last year, and found out that they actually have an office in Roma, in Rome, like the capital. And I've investigated all the ways of how you get your license in Italy, and I have all the information. It just makes sense for me to get my real estate license there. I'm asked constantly here, about investment opportunities in Italy, and I want to be involved in those discussions and in those transactions. And when I go there, I'm also asked by people who live there who want to invest and come here. So I want to be involved in both of those sort of transactions. Not 100%, but at least be involved, be legally able to work in that country. So that's one. Another is physical fitness. So physical fitness is huge, huge in my life. I'm an ice skater. Not as a kid. I never skated as a kid. I started skating as an adult, and I'm going through a test stream. So I'm training for the final test, the gold free skate, as you call it, which I hope to do at the end of toward like the fall of 2026. So, physical fitness is huge. I'm big into stair climbing. We have a CN Tower climb that we have twice a year. I've done it 3 times already, always improving my time, strangely enough. Whereas with most people, it's the opposite. You usually get slower, but I got faster. So I won't do it again. But I enjoyed that because stair climbing is part of my daily routine.
Well, if you live in condos, it's either the elevator or the stairs. So it makes
Yeah, and I never take the elevator, so the stairs was a default option.
That's why I love that question. I ask almost every one of my guests that because we get to find out stuff that we wouldn't otherwise know. And I just really appreciate you sharing your knowledge and your experience and just your journey. It's been really great to have you on the show.
Yeah, it was fun.
Well, you guys can all go check out CondoWiz, and hopefully it becomes a huge hit in the United States as well. And again, thank you so much, Nico. Until the next show, you know the drill. Go out there and share this with anybody that you think it'll help, and help us grow the Generations of Wealth platform. And go and share this and like this, love this. And until then, live your vision and love your life. See ya.